Secretary of the branch, C. Anirban Pal, and past chairman of the branch, and today's beloved speaker and excellent and well known to all people, C. Dr. C. Abhishek Murli ji, and my dear professional colleagues and ladies and gentlemen, I welcome you all to this virtual seminar. Really, it is a very lucky to have with us our Abhishek Murli today, because in spite of his busy schedule, continuous schedule, that he has kindly consented to be with us today. Really, I am very grateful to him. Really, I welcome you once again, sir, for this webinar. Sir, my dear friend, that you all know that this income tax, because our Prime Minister Modi ji, when he has taken the charge, when he has come to our CAD celebrations first, he has told that what is the population of this India and how many returns are filing. Only 130 crores people are there, not even 1 crore 30 people, 30 lakh people are filing the returns. And you know that all these currencies cancellation and the introduction of the GST and various other measures introduced, like if LCD bill exceeds 1 lakh rupees, he has to file the income tax return. If the foreign trip is exceeds 2 lakh rupees, income tax return is to be filed. Like that, so many varieties of restrictions put it. Now this filing of the income tax returns are increased like anything, because every year he is including the new terms, new income tax returns, and including the so many items and so many declarations to be made and so many disclosures to be made to the along with the income tax returns. Because every year, even though we are doing this income tax filing the income tax returns, every year these changes of these income tax returns, and we are getting doubts that too, because of this faceless income tax introduction of the faceless and assessments. So our work is increased, even though fees is not increased. Our work is increased to show all the disclosures, because you all know that this income tax department also doing so many fines for the chartered accountants for not filing it. Because this, you know that all clients, whatever information they will give, they will give short information. If we do not file properly, again they will scold us. But you people, you have to file, you have to take all the responsibility for even given the fees, very low fees, but we have to take the lot of responsibility in filing the returns, and we have to be meticulous. We have to take lot of care in filing the returns. So to update all the changes in this income tax returns, because you know that Government of India this released this and income tax returns on 6th April 20 after introduction of the Finance Act 21. This on 4th, these income tax returns are released on 4th April 2022. Consequently, some disclosures are there. Even these salary samples, also retirement benefits are to be shown. And like that, if the interest is exceeded on PF more than 2.5 lakhs, again we have to include it this in that also in income. And other reporting, even ESU, OPS also scheduled tax deferred on ESOP is inserted in the ITR 3, ITR 4. Like that, so many changes have come. But normally we are, after starting the filing, we will get so many doubts. So to clear all our doubts, and very well-known speaker and well-noted speaker and very knowledgeable speaker we are having today, see Abhishek Murli ji. Once again, welcome you all, sir. Once again, welcome you all this webinar. And whoever is in any doubt or clarification, without any hesitation, that he will clarify our doubt. Today we are having an excellent speaker. We are very fortunate. Sir, I welcome you with these brief remarks. That I welcome you once again for this webinar, sir. Now, Anwar Sridhar, please introduce the speaker to the August gathering, sir. Start, sir. There is no problem because whatever you reading is not sufficient. Today's 2 days, 2 hours for introduction of his proper. That much will be there. Don't worry. Because he is having so many qualifications and so many knowledge, so much knowledge. Not only he, his father is having knowledge. He is a central council member, and I know all some things. But as a formality that you introduce, see, Abhishek Murli, everybody knows his name and is very familiar about his knowledge also. So please introduce Dr. Gadri. Sir, you are unmuted, I think so. Sir, Sridhar, you unmute yourself. Sir, we are not hearing. Sridhar, please unmute yourself. Sir, unmute yourself, sir.
Abhishek ji, namaste. How are you?
Sir, we can skip it, sir. That's not required. We can go ahead.
No, 1 minute, sir. I think we. That login in iPhone and introduce, sir.
My phone. Yeah.
Yeah. Okay.
Yes. See, Dr. Abhishek Murli. With due apology, I have. If I skip anything due to time constraint, kindly apologize. Dr. C. Abhishek Murli is a practicing chartered accountant at Chennai and also a partner of Messrs. Victor Grace and Co. Chartered Accountants. He has completed. After completing chartered accountancy course, he started his career with Messrs. KPMG as a transaction advisory, mergers and acquisitions consultants on various national and international engagements. He completed his graduation and PG in commerce from Madras University, DISA from ICAI, CISA from ISACA USA, and SEMA from SEMA London. He is also a LLB graduate. Dr. Abhishek Murli has completed his advanced diploma in international taxation with CIOT London, certification in international tax law and transfer pricing from Leiden University, Netherlands, International Tax Center under the guidance of the world-renowned Professor Kees van Rode. Dr. Abhishek Murli has also completed his MBA and also attended special sessions at Harvard University. Dr. Abhishek Murli, besides having these many qualifications, he is secure. He is a first-rank student, like he is first-rank holder in SEMA strategy examinations and 17th rank in SEMA final examinations. He also All India 5th rank in international taxation examination ADIT conducted by CIOT. Besides this, Dr. Abhishek Murli is the youngest elected SIRC member of the ICAI for 2 consecutive terms for a period of 6 years from 2016 to 19 and 2019 to 22 by securing highest number of votes from Tamil Nadu. He has the honor of being the youngest elected secretary of SIRC of ICAI. During his term as secretary, the SIRC won the Best Region Award of the ICAI for the first time in more than 10 years. Dr. C. Abhishek Murli is presently the president of the All India Taxpayers Association. Dr. Abhishek Murli is also president of the Citizen Awareness Forum of India. He is also a founding board member of the ARK Foundation, which plays a key role in providing underprivileged families access to expensive medication at affordable prices. Dr. Abhishek Murli is an expert in direct taxation, international taxation, litigations, appeals, valuations, due diligence, mergers and acquisitions. He has organized and spoken at more than 2,200 seminars, workshops, and conferences organized by various trade and industry. He was felicitated with the Gold Star Award by Padma Shri Dr. Mainaswamy Annadurai, who is known as Satellite Moon Man of India, Project Director of Chandrayaan 1 and 2, for addressing more than 500 seminars during the COVID pandemic time alone. Dr. Abhishek Murli also received the Abraham Lincoln Excellence Award from the International Peace Council USA for his excellence in tax sector, laudable contributions of repute by addressing more than 500 seminars during the COVID period. Dr. C. Abhishek Murli is a member of the Committee for Implementation and Survey of Faceless Assessment and Faceless Appeal Proceedings constituted by the Ministry of Finance, Government of India. Dr. C. Abhishek Murli is a non-academic board member of the BOS Chennai, Madras University. He regularly appears on national and regional TV channels and contributes various articles of professional interest in various media. He is also a member of the Finance Subcommittee of Presidency Club and is a member of the Infrastructure Subcommittee of the Madras Gymkhana Club. He is an active member of Confederation of Indian Industry, CII, Young Indians, Chennai chapter. He is also passionate about startups and went to establish a vertical to help mentor startups. He has been nominated as the Honorary First Secretary, Economy and Trade for Honorable Consulate of the Republic of Zambia. Dr. C. Abhishek Murli professionally advises various leading industries, high net worth HNIs and professionals. He has held various positions at ICA New Delhi. Dr. C. Abhishek Murli has been nominated to various committees constituted by the ICA New Delhi. Dr. C. Abhishek Murli is the youngest SIRC member and has been unanimously elected as Secretary of SIRC of ICA for the year 2021 and holds honor of youngest Secretary of SIRC of ICA. He has been nominated as chairman of the various committees constituted by the SIRC of ICA during the periods 2016-17 to 2021-22. In addition to the chairman of the committees, he also been nominated as the member of the various committees constituted by the SIRC of ICA. Besides positions at the institute, he had authored several books of professional interest. His book on overview of the Companies Act 2013 is well received in the corporate circle. His books, Income Tax Ready Referencer and Taxation of Capital Gains, are extensively used by the professionals and government officials alike. He has authored background material for investors awareness references published by the ICA New Delhi. Dr. C. Abhishek Murli regularly contributes articles of professional interest in the online magazine Tax Sutra and other leading online portals. He addressed various conferences, seminars, and workshops organized by the corporate forums, professional bodies, universities, income tax, central excise departments on varied topics, so on and so forth, tax appeals, capital gains, tax planning, corporate law, valuation measures, due diligence, soft skills, career orientation, etc. He also held various positions in several organizations such as Hindustan Chamber of Commerce, Sri Shankar Sundarbai Shasoon Jain College for Women, Citizen Awareness Forum of India, Madras Gymkhana Club, Madras Cricket Club, Madras Race Club, Presidency Club, Mylapore Club, Cosmopolitan Club, Gold Phoenix and SVS Club, Indian Heritage Cultural Society, and life member of YMCA. Dr. C. Abhishek Murli is a regular speaker on various technical and non-technical subjects and has addressed conferences, seminars, and workshops for over 1,500 seminars. He is a regular guest speaker at various corporate forums, professional bodies, universities, colleges, and schools. And he is an active Rotarian and founder member of Rotary Club of Madras Next Gen. He is an elected committee member of the DLF Commanders Court Condominium. He is a member of the infrastructure subcommittee of the Madras Gymkhana Club. Dr. C. Abhishek Murli is a vivid golf player, badminton, squash, football, and table tennis player, and is a keen follower of the game of football. With these few words, I introduce Dr. C. Abhishek Murli to the August Gallery. Thank you, sir. If I missed out something, kindly forgive me.
Thank you, sir. Thank you so much, sir. Chairman, sir, should I start the session? I think you are muted, sir.
So he has read only small profile, sir, very briefly, because your profile, reading your profile 2 hours is required. So thank you very much, sir. I welcome you once again. Now the floor is yours, sir, that you start, sir.
Thank you, sir. Thank you. Very, very warm good afternoon or good evening to one and all present here. Firstly, the chairman of Vizag branch, my very good friend and mentor, I should say, Vasudev Murthy, sir. He's always smiling, very positive person. So thank you, sir, for inviting me and giving me this opportunity. All the other management committee members of the Vizag branch, I see many past chairmen also there, like Murali Krishna, sir, Bharti Devi, madam. I see Vandana Ravi, sir. And of course, I have to also personally thank Sridhar sir for a very lovely introduction. Even though he said he's keeping it short, he has given more points that's there in the profile itself. So thank you, sir. So kind of you. And the topic chosen today, changes in the ITR forms, very, very appropriate topic by the Vizag branch, because this is the season when now slowly your clients will start coming to you. They will start saying, sir, I have got these details. Can we file my return? I have got my form 16. All these discussions will start right now. So I'm sure that just before that process starts, it's very, very important for us to know exactly what details you must collect from your client. And to know what details you must collect from your client, you need to know what are the changes in the ITR forms. You see, in the last 2 budgets, or we can say in the most recent budget, we had very huge anticipations going into this budget. We thought inflation has gone up. It's been more than 8 years since changes in the tax slab rate, but absolutely no change. Whatever Bahubali feeling you had before the budget that you thought changes will come has definitely not come in this budget. No changes in deductions, no change in the slab rate, no change in the exemption also. So given the last 2 years, hardly any movement in the critical aspects as to taxation and the slab rates. Should there be any changes in the ITR form? Ideally speaking, logically speaking, there should not be that much movement because the law itself has not changed much. But interestingly speaking, there have been some significant repercussions, not just in the ITR forms. If you take simply ITR forms, not many changes are there, but in the surrounding key developments, it's very, very important for us to know. So let us start with the first most important key development. It is called the Annual Information Statement and the Tax Information Summary, AIS and TIS. You see, in mid of November last year, government suddenly announced in compliance portal, we are bringing about the AIS and TIS is available now to all the taxpayers. Now, this timing was very, very innocuous because the time barring date, or rather return filing date, was 31st of December last year. So many persons by mid-November, I think this came around 20th November, like that, they had made this announcement and available. But by that time, so many people had filed the return of income already. Suddenly what happened? Because of this development of this AIS, everyone started running and coming towards us for revision of the returns. Because this AIS and TIS proved to be a major deal breaker. How many of you will have come across people, especially generally you will find the salaried persons who are working in IT companies. What they will do? Some person will be there in their office. He will say, I'll file the returns for 100 rupees. Or if you go, in fact, I remember in Chennai, when we were going, we stopped at the signal because there was a lot of traffic there. And I happened to look over to the side. There's one very small shop. It was a Xerox shop. So they had put in the notice board outside the Xerox shop on the road. They have taken one small space and they're putting what are their charges. So putting for Xerox so much, for scanning so much. If you want to log into the internet and print something, so much is the charges. If you want to file your income tax returns, 100 rupees. They had put in a Xerox shop. So I was thinking, as a qualified chartered accountant, after 3.5 years articleship, so many years experience, you are also filing returns. That Xerox shop person also filing returns. What is the difference? Many websites today exist. Many persons are there who file the return of income purely on the basis of Form 16. They don't know anything else. Form 16, Form 26 is based on these two things only people file the return. But both you and I know, all of us are professionals. Maybe some articles are also watching the program. But all of us know practically when a person has salary income, naturally the salary is getting credited in a bank. If it is getting credited in the bank account, then some savings bank interest will be there. Even if it's not, even if he transfers out the money, full money is spending also, still 1 rupee or 2 rupees or some paisa at least will be their interest. But whenever you take a salary return, whatever is there in Form 16, copy paste will be there. This person will have a house property, they would have missed it. He'll have a fixed deposit, they would have missed it. Capital gains, forget it, no chance. He'll also not tell. The person who's filing also will not tell. So these sort of returns were being filed. And being salaried persons, it used to get completely missed out. In fact, as somebody has rightly pointed out in the comments, some people having short-term capital gains also on shares, they will also not tell. There was no way of tracking it. Unless it gets picked up for scrutiny, there was no way of tracking it. But then suddenly this AIS-TIS came. What and all is there in this AIS-TIS? Details of savings bank interest from your RD accounts also. FD maybe you will say 26 AS is covering, but your RD now comes in your AIS and TIS. Any rent received details, whether TDS is applicable or not. If your tenant happens to be claiming HRA, then he is mandated by law to furnish your PAN number to his employer. The moment he does that, that will come and reflect against your name because you are the owner, landlord. Your tenant has given your details. Whether you are disclosing or not, income tax knows you are getting this. Cash deposits in the bank account, cash withdrawals in the bank account, any foreign travel expenditure, foreign currency purchased, sale of land building, and issue of credit cards also is going to come. When you get a credit card during the year, that details is also going to get captured in the AIS-TIS. Forget repayment. Earlier, SFT used to capture, if you're paying credit card bills in excess of 1 lakh, then it used to get captured in the SFT in your 26 years. Now, when they're issuing credit card itself, it's going to get captured. So what is the implication of this? I'll give you the practical example. As I told you, November season, certain people who had pressured to file the returns, we had filed before the November. Then suddenly they all came. In fact, some clients who are more than 30-40-year-old clients, they came. When they came, I asked, sir, is there any, you have this Canara Bank account? No, it's not there. I said, no, sir, you have not shown, but you have this account by any chance? Yeah, but we have not been showing for 30 years, Abhishek. I said, sir, you forget whether you are showing or not. You are supposed to show. Whether you are giving or not is different. I don't know what account you have. Unless you tell the chartered accountant what bank account you have, he is not going to know. But now, whether he tells or not, whether the CA discloses or not, now everything is going to get disclosed in the AIS and TIS. This AIS and TIS is a compilation of all the information that the government have. What they are getting from the TDS documents, what they are getting from TCS, what are the mandated faceless collection will come, what is the SFT being filed by the other parties. Everything is getting compiled in the AIS-TIS. Yes, there are mistakes also. Sometimes there are mistakes also, but it is all getting captured over here. So now, as rightly pointed out by somebody else in the comments, And I usually keep the chat box open. So anybody wants to share your views, you have any doubts at that particular point of time, please feel free to add it in the chat box. I will address it immediately then and there itself. So as rightly pointed out, AIS is likely going to cover even fixed deposit in Grameen banks, cooperative banks. All of these authorities are now slowly being made to face the law, where they are given different new forms. We thought it would be compliance free, but it has become compliance heavy now. So therefore, people have to file various forms. You may have faced this challenge where 10BD, the form where people are claiming 80G, the companies who are giving 80G deduction, they have to file now a new form called 10BD, where they have to give the details of who and all are the donors. That form was not available till yesterday. So everyone was struggling, asking, how will I file? What will happen? They are saying they will initiate penalty against me. So I said, if it is not there, you file manually. It is okay. You just put it on record that either it is not there or you have attempted filing. So I think today it has been made available, if I'm not wrong. But till yesterday, there was so much confusion. But what is going to happen? This 10BD will capture the donor information. So whether your donor is simply telling to reduce the tax, sir, you put 80G, I gave to this organization. PAN number you can find online. So he will say, sir, I have given here, sir, you put 50,000, I have paid them. So whether you are giving you the bank statement or not, whether you was actually given this donation or not, you cannot track. But because he has told you are putting it, now all those days are gone. Straight away, the computer will reconcile and see if you are there in the list as per the list given by them. If you are not there, straight away under 143(1 on pure intimation, it will be deleted. And everything is going to get captured in this AIS and TIS. Now, the next two very critical point for you to know, as I told you, your bank information is going to get captured because they have the CBDT has entered into an arrangement with the banks to share the information. But the reason why I brought this up is because of a certain practical issue. Now, just last week, I had a case that came to me where under the new reopening under 148A, they have reopened a case which is 8 years old. This chartered accountant told me, Abhishek, it's incorrect. I said, why, sir? They reopened for 8 years. I said, they can reopen now, sir, no problem. He said, no, sir, they have said cash deposit is more than 50 lakhs. I said, definitely, if it is more than 50 lakhs, they have to reopen. He said, but actually cash deposit is only 35 lakhs. It has not crossed the 50 lakhs limit. It is less than 50 lakhs. It is only 35 lakhs. But what has happened in the AIS and TIS, it has come twice. It has been appearing twice in the AIS and TIS. Some of you may have found this issue. So what should I do if I find an issue in the AIS or TIS? If it is wrong, if there is double counting of information. One other common issue that many of you may have faced, because this doubt was also asked, dividends. In AIS and TIS, dividend will show 60,000, but actual dividend received by that assessee will be only 30,000 in the bank account. Now, this dividend is getting captured because the companies are giving the information of the declaration of the dividend. But you may be following cash system of accounting. So you will record for it only when you're receiving it. And you are receiving only 30 now, balance 30, you are receiving it next year. Now, the question you will ask, it is showing 60,000. Does that mean I have to offer 60,000? If you want, you can offer. Income from other sources can be cash basis or accrual basis. It is a choice. So if you are following accrual basis, you can offer 60. But if you are following cash basis, that fear is there. No, computer will say 60, but for me, it is only 30. What should I do? Please go to the compliance portal. Once you log into the normal income tax portal, you go to see your work list, etc. Pending items will be there. Under that, there will be one tab called compliance portal. If you click on that compliance portal, it will take you to the AIS and TIS page, where if you select AIS, the entire list of all the transactions captured in the AIS will come out. Now, some of these transactions are correct. You don't have to agree, saying, yes, it is correct, I agree. But whatever is wrong, so dividend, it is only 30,000. Please submit your response. You have to submit what they call a feedback in the compliance portal. Select the drop-down box, select saying it is incorrect, or it is partially correct, or it pertains to a different year, or you can give others as a reason and describe what is the issue. So this is a very important thing, because when it is there in AIS and TIS, it is highly possible that the department will make adjustments under 143.1. And we all know 143.1 these days, when they make adjustment, you can forget about it. They will ask you, we are going to make adjustment. Do you have any submissions? You can give the submission. Still after that, nothing will happen. They will pass the order. I don't know why they are asking submissions at that stage. I have never seen even one case so far where they have accepted the submissions. Never I have seen in my life actually. Under this, after the computerization of 143.1 has happened, simply just for the sake of sending, they are sending. If 143.1 comes, addition might as well be made. So better you go on appeal in these circumstances. So if you want to avoid that, it's better you submit your feedback on the compliance portal. Now, why I am put this thing? Because very recently after the budget, there are a lot of interviews done with the CBDT chairman, revenue secretary, etc. And then the revenue secretary happened to say, why everyone this budget? In fact, we had also submitted from the All India Taxpayer Association our budget memorandum, pre-budget memorandum. The feedback that we got from the taxpayers is that they want increased exemption, they want ATC deduction, that they want slab rates to be changed, they want a reduction in the rates or increased slab rates. So all of these representations we have submitted. Now, interesting, the revenue secretary is saying, see, we have given you two schemes. Old regime is there, new regime is also there. Why everyone is asking ATC? Why everyone is asking increase in housing loan interest? Why you are not opting for the new scheme? So this is, we need the people to change their mindset. This is what the revenue secretary has openly said, which seems to be very silly in my view, because they have given the old scheme, they have given the new scheme, both options they have given. Where majority of people are choosing the old scheme, that means the new scheme, some problem is there. It does not mean that why you are choosing the old scheme. It's not by mistake. It is because it is clearly a better scheme. So either they should improve the new scheme or they should improve the old scheme, whatever benefits that people are asking for. So therefore, this entire mandatory outset is very, very wrong. As rightly once again pointed out by a couple of members to me in the chat box, you can very much expect, yes, sir, as you rightly said, Shravan sir, you can very much expect that in the next few years, they will remove the old scheme altogether. They want to go to the new scheme. That is why repeatedly they are saying, simplify the tax law. We need to simplify the Income Tax Act. It is too complex. What is complex? It is complex because proviso is there, exemption is there. If you remove proviso, you remove exemptions, means it is straight away tax only. There's only taxable provisions. There's no benefit provisions. That is why it is complex. Otherwise, the law is not complex at all. So whenever they are telling that word, we have to make it simplified. We have to simplify it. We have to make it easy to understand. It's too complicated. That means they want to remove all the exemptions. They want to remove the deductions. They want to bring a single scheme like the new regime. Ultimately, you will find in the next 4 to 5 years, the government is trying to push us to the new regime. So why is that relevant here when I'm talking about filing income tax returns? Please note, if they change to this scheme, then there is hardly any work from our side. AIS and TIS will populate all the information because there is no exemption, there is no deduction, no standard deduction also is going to be there. Forget housing loan interest if it's self-occupied. Chapter 6A, everything is gone. So absolutely nothing is there where the auditor or assessee has to fill anything. Everything will get auto-populated from AIS and TIS, unless you have business. Only case where it can't be done is if you are having business income under ITR 3, because expenses, all that information. So far, at least till date, they have not been able to track it. So other than that, every other person are going to get into the issue where it will auto-populate. So we must gear up for this, ensure that we are able to tackle that issue. Now coming to the next big development. This is something majority of people have asked me because of certain practical issues. Now, in July 2020, almost 2 years back, CBDT and the GST authorities entered into a data pact for sharing of information. Now, in the sharing of information, earlier, I still remember, very, very early days, one of my first audits that I went to, I remember I went to one person, one client, and I said, sir, I need to audit. They have told me to tick the vouchers. So I took the vouchers and I'm ticking and I'm comparing it to the ledger. It is not matching at all. So then I went and I asked their accounts team, sir, it is not matching, sir. Can you please help? No, you are, who asked you to tick this? I said, my senior told, sir. No, but who gave the data from our office? I said, one staff have given. They said, no, they have given you the income tax records. You have to look at the indirect tax records. I said, but sales is same figure. No, sir, whatever there in income tax and this is not different. It's same financials. No. We have separate records for income tax, separate records for indirect tax. So then I had to escalate this matter. And then finally they had to qualify it because of various issues. But many companies and many assessees for that matter, it may be funny. It may seem very obvious to us. But what they used to do, they used to keep separate records for indirect tax authority, separate for direct tax, in the confidence that neither of them will speak to each other. By the time income tax asks for information, indirect tax person will receive it. He will keep it in his drawer. Before he can take it out of his drawer, he'll be transferred. This is what used to happen practically. Now everything is pre-populated. You may have noticed in your 26 AS, in the last part of your 26 AS, what is your GST transactions? Turnover month on month as per GST records. What is the exempted turnover? What is the taxable turnover? This breakup is coming month on month in your 26 AS itself. Now, here the important point to discuss. So let's assume you are complying with everything. You are filing properly, only one set of records, and everything is perfect. You are maintaining. But despite that perfection, some of you have faced this issue where in 26 AS, for some reason, some figure is there. It is not related to your assessee. 1 or 2 months, it does not match at all. It is not because you have filed the wrong GST return. I don't know how they are getting that information, but some information they are getting, it is populating, it is incorrect figures. It is wrong figures. So what should you do in these scenarios? Please do one thing. And this is what we are telling all CAs, and this is what we are doing. If there is any difference at that stage between your 26 AS and your monthly GST returns filed, prepare a reconciliation statement for your record. You don't have to submit it to income tax. You don't have to go for correction and all. You prepare a summary, put a reconciliation, put differences if any is there, any explanation is there, properly find out and ensure you type it and keep it on your system or keep it in your file, so that in a subsequent date, if 143(1) is initiated, you can straight away submit this and justify it without searching for it. So this is a CBDT and GST sharing initiative. That is what is being reflected. Okay. Probably the most important development which has happened less than a month back is that there are some new income tax filing rules which have now been justified and brought about. You see, till very recently, return filing is always income-based criteria. How much income you have? If your income exceeds the limit specified in the act, that is the maximum amount not chargeable to tax. If your gross total income does not exceed that amount, then you have to file the return. Otherwise, you don't have to. So if you're a normal citizen, up to 2.5 lakhs, senior means 3 lakhs, very senior means 5 lakhs. So let us take a scenario. I'm a person who has 99 lakhs turnover. I have 98.5 lakhs as expenditure. Do I have to file the return? I don't have to file it. Because even though I have 99 lakhs as my turnover, even though I am incurring expenditure of 98.5 lakhs, my profit or my gross total income is only 50,000. So I don't have to file my return of income at all. It seems very, very unfair, because what used to happen, I'll give you an example of a shop near my house. In Chennai, if you come to one place called Alsa Mall, that mall is famous not because of the mall, but because outside of that mall, there's one small sandwich shop. It's a roadside shop. It's a very famous sandwich shop, but it is not even inside the mall. It is on the road. Whenever you go there, there will be a huge queue. Almost 100 people will be there all the time. And it will keep on going, so many sandwiches. So he will keep making the bread and he will keep sending it on a plate and he'll be giving it. So this person, he'll be buying packets and packets of bread easily. His billing will be at least 1 lakh during the day, per day. And his expenses also logically should be at least 80,000 it will be. So this much he is having income and expenditure per day. I'm not even exaggerating. But if you go and ask him, sir, are you filing returns? He'll say no. He says, sir, have you got a PAN number? He'll say no. He'll say, have you got a GST number? No. Do you have a bank account? only for certain transactions which I compulsorily have to pay. That is why. I said, what about rent? This place you have taken from the mall or from somebody. No, I'm paying that person in cash. What about electricity? You have a gas connection, you have light, the fan and all is there inside. What about that? That everything I am paying to the government directly through cash. So this is how he is operating. So if income tax issues are noticed to him, finally he will say, why you didn't file the return? He'll say, so my gross total income is less than 2,50,000. If you net my income and expenditure, it will come less than that. So people used to avoid the income tax, avoid their scrutiny, avoid their gaze, even though information may be there, even though we all know that they should have complied with these laws. Despite all of this, they used to avoid filing the return of income. So slowly, what the government have done, they have brought certain new rules for filing the income tax returns. They have changed it from an income-based criteria to expense-based criteria now. So what is this new expense-based criteria? So it started first in 2018, where they said, if you're paying electricity bills of rupees 1 lakh or more during the year, then you have to file the return of income. They said if you're having foreign travel, either for you or for someone else, of rupees 2 lakhs or more during the year, then you have to file the return of income. Now that seems okay, straightforward, but let me ask you a question and maybe you can answer this. Let us assume there's a NRI, or he is a person who has studied in Visakhapatnam. After all his studies, he has gone abroad. Now he is working in the US. He has got a green card. He is settled, married, has a family in the US. He does not have any income in India. His senior citizen, a widow mother, she is there in Vizag. So the son is telling, mother, please you come. Amma, I want you to come to the US. Why you are staying alone? Mother is saying, no, temple is there. My friends are there, relatives are there. So I'll be here only. Whenever I want to come, you book my tickets. I will come travel there and come. So he'll also say, okay, you allow me to at least pay your expenditure. You just relax, you take life easy. Whatever bills you have, you send it to me. I will pay it online. Now, can you tell me here, who has to file the return of income? Does the NRI person who has no income in India, does not have any residentship in India, he is a US citizen now, does he have to file the return of income because he is incurring the expenditure? Or does the old senior citizen lady who also has no income in India, she's a retired person, she does not even get pension, she is not earning any income, but the house is in her name, electricity box is in her name. Who has to file the return? Is it the NRI or is it the mother in India? There is a vagueness to this provision. If you take this electricity bills paid, then it is vague. It says whoever is incurring the expenditure or paying the expenditure. No, the person who is paying is the NRI citizen. Similarly, foreign travel, that son is booking business class tickets for his mother, saying, you come comfortably, Amma, I don't want you to strain. You please come very reasonably, comfortably, whatever best fare I'm going to book for you. So one way itself, 2 lakhs rupees will be gone. So who has to file the return here? Foreign travel, very clear. It says whether you're paying for either yourself or somebody else. So now, as per these provisions, that NRI who has expenses in India, but does not have any connection or income in India, he is forced by the law to file the return of income. He'll not be aware, but he has to file. So therefore, it's our duty now to start enlightening them that they need to file. So this complexity was there. Now what they have done, they have brought 4 new provisions where TDS or TCS was rupees 25,000 or more, then you are duty bound to file the return of income. Why did they bring this provision? Many people who have other incomes, TDS will be there. They'll just not file the return because TDS is only 10% or 1% of the income. They have to pay tax at 20%. They'll not file the return. And they'll say, no, actually refund is due to me. I am a fool. I did not file the return of income. See, TDS and TCS is there, sir. If you net it off, everything will be correct only. Then they said another thing, where deposits in the bank account is rupees 50 lakhs or more. Now, what do they mean by deposits? Deposits is a very wide ranging term because you and I as chartered accountants know deposits can be anything. It can be savings bank interest deposited also. It can be a check deposit, it can be cash deposit, it can be salary also. So what do they mean by deposits made to the bank during the year of rupees 50 lakhs or more? Once again, the provision is deliberately vague. So now, what do they mean here? They mean the credits to the bank account. So the entire credits has to be taken. Where the credits to the bank account exceeds 50 lakhs, then you are mandated to file your return of income. Whether it is salary, whether you have full expenses, you follow peak credit concept, cheap credit concept, whatever you want, you follow. Does not matter. You're duty bound by the law. If you have credits in your bank account of rupees 50 lakhs or more, you have to file the return of income. Here, let me ask you a question, and you can tell me if you know the answer. If I'm a person who has agricultural income, because especially in agricultural income, you'll find this, where they'll have one bank account, heavy cash transactions will be there. But ultimately, agricultural income itself is exempt. So why they have to track, we don't know. But can you tell me this? Does he have to file a return of income where 50 lakhs credit is there in his bank account? He may have 49 lakhs or 52 lakhs as debit. Does he have to file a return of income where it's only agricultural income? Many people saying no, no, no. Now KSPA sir has said yes. Few more others are now saying yes, 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 he has to file the return of income. Yes, Sharmila ma'am, you are absolutely right. Everyone who has said yes is absolutely right. That now, under the new provisions, they do not distinguish the nature of income. You may have sold a property. Property may be a loss. You may have sold a car. Maybe you're making a loss. Despite all of this, if your credits to the bank account during the year, fixed deposit matures, LIC receipt you're getting, insurance claim you are getting, all of this is included in the 50 lakhs limit. So therefore, 100% you are required to file. And Pushkarji has asked, will it be per bank total or a total of all the banks? It's an excellent question. Because I may have 10 bank accounts. So therefore, does each bank have to be counted or aggregate? The law says aggregate, sir, where the deposit in aggregate amount in the savings bank accounts exceeds rupees 50 lakhs. So across all the banks you have to see. So it is not restricted to one bank. 1 year by mistake, if you get maturity claim from any of your FD, etc., you will automatically trigger it if it goes about 50 lakhs. You are duty bound to file the return of income. Now, someone has rightly asked, what about contra entries? If I transfer from one of my own account to the other account of the same person, is it considered to be a deposit? Excellent practical question by CA Rohit. Here is the very interesting point. Because both you and I know that deposit contra entries is not technically a deposit. It is my own money that I'm just transferring from one account. But this is the systems era. Bank will report to the income tax department saying this person has more than 50 lakhs credit during the year. Whether it is contra or not does not matter. So they will issue a notice. We believe that you have to file the return of income, but you have not filed. So then you have to respond to the notice. You will have a hearing. So instead of doing all this, that person can simply file the return of income, pay a small fee to the auditor to file the return of income. So therefore, ultimately what these provisions mean. What is the meaning of these provisions? When in doubt, wherever you have a doubt whether I have to file the return of income, oh, I have 10 houses, I'm paying electricity bill for all of them. 1 lakh rupees, is it each house or all together? It is all together. Or foreign travel, I'm not sure how much I spent. I have to go search for the bill. I don't know whether it will increase 2 lakhs. Should I file or not? File the return. Where in doubt, please file the return. Even NRI, you advise them to file the return of income. It will be a nil tax return. They don't have to worry about anything. If anything, they will only get a refund. Better they file the return. This year, there happened to be one associate where there was a capital gain transaction. Finally, when we were preparing, we realized that he has 4 houses. He has not filed the return of income for so many years. He came for capital gains doubt and this came out of it. And then he said, yes, I get some rent. I'm getting this, I'm getting that. He said, you should have filed the return of income. But department did not have any way of tracking before. But now, because of the arrangement with the banks, they are able to easily track the information of what are your bank deposits. So therefore, as Ramakrishnan has asked, or Ramakrishnan, I'm not sure, impliedly, if bank term loan is credited, then also you need to file the return of income in spite of no taxable income. Absolutely right. I've taken a loan for a house. The loan has come into my bank account. It has not gone directly to them. It has come into my bank account. I have to file the return. So any credits to the bank account, any deposits made to the bank account, whether by you or by somebody else, it does not matter. In my view, you have to file the return of income, whether you have equal expenditure. Today I'm getting 50 lakhs deposit. Tomorrow I'm returning it back to the same person. Still you have to file the return of income because your credits have exceeded 50 lakhs. They have not said net credits. They have not said net of returns and refunds. It is just what is your total deposits made during the year. So therefore, please note all of these scenarios, wherever you have these kind of doubts, advise your client to file the return of income. This is good for professionals also. As a chartered accountant, it's a good thing. More importantly, it is good for the income tax and the government, because now they can actually track the persons who need to file the return of income and who are trying to avoid. Because when they default, then they know that not only they have to pay our fine under 234F of 1,000 rupees or 5,000, there will be penalty also. And government have now gone very, very serious about prosecution as well, where there's a willful default, where deliberately a person has not filed the return of income. We take all those TDS cases. Someone has TDS, he's saying, sir, TDS is there, I should only get a refund, I'm not filing the return. It's okay, sir, you see 30,000 TDS is there. Oh, I'm a fool, sir, I did not claim refund, I should have filed the return, I didn't file because a refund only has to come. It's okay, you take it to the government. But actually speaking, the TDS will be deducted only at 1% or 2%. What about the balance 20%, sir? That person will be avoiding tax. He'll be deliberately not filing the return of income by simply saying refund I have to get. So he has to file the return at that time, means he'll put expenses and claim. Now government have become very, very serious. They want to increase the tax base because they strongly feel if people comply, the people who are not filing, the people who are not paying tax, people who are out of the income tax net, if they are brought into the net, then the tax revenue will be much higher and the government can definitely give better tax rates to the income tax filing assessees. But because they are not, our government have started taking it seriously and prosecution cases are at an all-time high. It's gone up by more than 300% in the last 4 to 5 years compared to before. So therefore, please encourage people to file the return of income, even where they're slightly doubtful. Do I have to file or not? Better you file. When in doubt, file the return. That is what I will advise now. So now let us come to the ITR forms itself. Now there has been no major change when it comes to the ITR forms so far. Right now, only ITR 1, 2, and 4 is available on the website. 3 is still not available. But let us now touch upon what are the basic changes in the ITR. We all know which ITR is used for what. Largely, we are all aware. ITR 1 is meant for salaried persons having income less than 50 lakhs. ITR 2 for individuals HUF having capital gains. 3 means any business income means 3. 4 is presumptive. 5 is for firms, LLP, etc. 6 is for companies. 7 is meant for trusts who are approved under 12A, 10A, etc. Now let us take ITR 1. ITR 1 has some very, very important criteria. Reason being, everyone wants to file ITR 1. Even me, if clients come and it is ITR 1 is applicable, I am happier because lesser details to fill, less complexity, faster processing, various conditions are there. But there are some conditions as to why ITR 1 only has to be filed. And these are certain important conditions. I'll tell you what it is. For individuals being a resident and ordinarily resident only. So only if you are a R and OR, then only you can file a return of income under ITR 1. So if you're a non-resident or a resident but not ordinarily resident, then in both cases, you cannot file ITR 1. Forget it. ITR 1 is simply not applicable for you. One property. This is very critical. one house property. Let me give you an example. I am an associate. I have two houses. One house is self-occupied by me and my family. Second house I have let out. Now let us assume I'm an IT company professional. Am I audible? You just
Yes,
say
sir.
yes.
Yes, yes.
Okay, thank you, thank you. Suddenly I said it came some from connection is stable. So if there's any disturbance, please do let me know either in the chat box or by unmuting. So I'll be happy to change my internet connection if that's the case. Anyway, coming back to what I'm saying. I'm an assessee. I have two house properties, one let out, one is self-occupied. I'm an IT company employee, information technology company employee. So what I'm doing, I'm filing the return of income myself. I offer my salaries, I offer my interest, everything I'm offering properly. What I'm doing, I'm filing ITR-1. Because anyway, self-occupied, value is nil. So whatever property I'm getting rent from, I'm filing under ITR-1. That property details I'm disclosing and I file it finished. Can you tell me, is this a valid return? Because here, I have not cheated the income tax in terms of what is the amount. Whatever rent received, I've offered. Standard deduction, I've claimed. Whatever tax payable, I've paid. Gross total income is the same. Taxable income is same. Only thing difference is I have two houses. One house self-occupied nil. That I have not shown. Straight away, whatever rental income I have got, I have shown and I have filed it. Please note, so far, till the current year, even where income tax has the information, even though income tax has the information that you have two house properties, they did not take action. They still process the return of income. They did not question anybody. Now, however, from the current year onwards, they have made it very, very clear. If an assessee has two house properties, but he is showing only one in the return of income, or he is filed the incorrect ITR, then straight away the return will be invalidated. You will be given 12 days time to rectify it. Nowadays, they are giving only 7 days, not even 12 days. 7 days time you will be given to rectify this mistake. If you refuse to rectify this defective return, it will be treated as an invalid return. So therefore, even though your figures are right, even though gross total income, taxable income, tax paid, everything is the same, due to a small issue of you not offering the self-occupied house property and not having filed ITR-2, where you have to furnish full details, address details, any co-ownership details, all of these details have to be furnished in ITR-2. You wanted to avoid that, finish in ITR-1. Sorry, sir, it will be treated to be invalid. Then they go on to say, ITR-1 cannot be filed by an individual who's a director in the company. So if you are holding a non-executive or executive director position, or you are an independent director also, in all of those scenarios, you will not be allowed to file ITR-1. You may say, I don't get any income from that. I don't even get sitting fees. So I'm just a director in that company, is just for face value. It does not matter. You still have to file ITR-1 only. There's no other option for you. Another very interesting thing, where an assessee has invested in any unlisted equity shares, then also you cannot file ITR-1. I'll give you once again a very practical scenario. This happened with one of my clients. So this client regularly files a return for us, and he happens to be holding a very good position in a multinational company. So once when these rules were notified, he came to us for filing the return last year. And I asked him, sir, are you a director in any company? He says, no, I'm not really any director. I said, okay, sir, then we'll file ITR-1. See, what happened is, in our office, we have a system where my staff or somebody will check the name of the person, whether he's a director or not. You have in Google, you can put anybody's name, and MCA website or even a non-MCA website, various other websites, Zoba Corp, Zero Corp, like that, so many websites are there. Where if you put the right name of the person, list of directorships will come. So what happened is, we put this client's name there and we saw that he was a director in a company. I asked him, sir, you're just Googling and we found out that you're a director in a company called Rainbow something. He said, Abhishek, that was more than 30 years back. You see, my friends and I, when we finished college, we started a company. It did not take off. So less than 2 years, we stopped doing business in the company and we got into employment. Ever since then, I've been in employment. So I said, okay, it should either be an inactive company or it should have been struck off by now. So he is not a director anymore. However, he is still holding the unlisted equity share. Let us take a practical scenario. You and I will do incorporation for so many people. All of you will be doing regularly incorporation for many companies. You'll be doing the Spice forms, Spice Plus forms, whatever it is, you'll be doing it. But how many of you are doing liquidation or winding up? You forget insolvency practice, but regular winding up of a company, how many cases come to you? Less than handful, I am sure. Because people start businesses. If it doesn't succeed or it doesn't take off, they just leave it. They don't go to close the business. But what happens if they don't close the business? They happen to continue holding equity shares in the company. So in this client's case, even though his income within 50 lakhs, even though only one house property in his name, even though he does not have a director position in any company now, he is still holding unlisted equity shares. So straight away in this scenario, you cannot file ITR-1, you must file only ITR-2 or ITR-3. Straight away, they have removed the opportunity to file ITR-2 or ITR-1 in these sort of cases. Now, one very interesting change in the latest ITR form is regarding residential status for a non-resident. You see, in the erstwhile income tax form, it used to ask your residential status. Are you a resident or a non-resident? If you put resident, means it will ask you in what criteria. Is it because you are there for 182 days or more? Or is it because you were there for 4 years or more in the last, 365 days or more in the last 4 years? So you have to select that drop down. Similarly, if you're a non-resident, it will ask you which jurisdiction are you a resident in. All that details you have to fill. Now it is asking for one more information. If you select that you are a non-resident, then it is asking you to specify what is your total period of stay in India during the previous year and the last 4 preceding previous years. And you have to mandatorily provide it. You see, many assessees, what they used to do, especially if you have any client who's in the shipping industry, what people in the shipping industry used to do, they will time their travel. They will ask their auditor, sir, which 182 days when it finishes? Sir, it finishes around October to November. Okay, then I'll plan my return in November. I will not come in the month of October. So they will refuse to come in that 182 days. So correctly after 186 days, 187 days, they will land in India and they'll be in India for the rest of the year. So that 1 year, definitely he'll not be a resident because he's been outside India for more than 182 days. But if you take the last 4 years, then definitely he would have been in India for more than 365 days if you add it. But people used to still file saying they're non-resident. Now they want you to specify the number of days. You have to type out the number of days in the latest ITR form. So if you're a non-resident, if your assessee is a non-resident, then you must get his passport details to check the day of entry in India, day of exit, etc., and populate this information. Because now this will all be done by the Home Ministry, and the Home Ministry will share it with the income tax. And I am sure that the passport offices, etc., once they tabulate the information, it will make it very straightforward. And if you disclose the wrong information, then your residential status itself may change. And that means your tax impact will be substantial. Your entire foreign income will be brought to tax if you're determined to be a resident in India. So please be very careful and ensure you fill this correctly for your clients when you're filling it. It's the latest development. It is there only from this year form. Similarly, one very interesting thing, it is not a particularly major change, but it shows what the government is trying to do. Now, if you see the AIS-TIS form, there is a screenshot of it. It's not that easy to understand. And if you take the salary schedule and all, so much more information required, it's not very easy to fill. But government are increasingly trying to encourage assessees themselves to file the return. Don't go to chartered accountant. Don't go to a tax practitioner. File the return yourself. This is a very, very strong message which is being sent. In order to encourage that, if you take any ITR 1 or 2 or 3, only under the salary page, they have put a screenshot. This I box that you're seeing over here, that small I, where I put a rectangle box around it. That is the information box. Normally for everything it will be there. If you hover on that information box or you click it, it will just briefly describe what is that information they are seeking. But only in salary income, they have put a page screenshot itself from the AIS return, saying that this is the place where you have to pick up the number from. Gross salary, you pick it from here. Exemptions, you pick it from here. Deliberately, it has been done to make people file the return of income themselves. So that's what they are trying to do. That is the entire objective behind that amendment. So it is not particularly a change, but something you have to be aware about, that they are trying to encourage the assessee to file the return of income himself. Okay, now I have a very, very interesting question. Let us take a scenario. The assessee owns only one house. Assessee is a salaried employee, has less than 50 lakhs income, owns only one house. He and his wife jointly own that house. He has interest income, and that's it. That's it. Which ITR form does he have to file? Does he have to file ITR 2, 3, 4, or 5? As rightly many people are answering, in this scenario, it appears that he has to file ITR 1 only. Now, one or two of you have said ITR 2. Now, I'll justify why that is the right answer. You'll be wondering, you said less than 50 lakhs income. You said only one house property because it's jointly owned with wife. You said no other criteria it is triggering, none of the directorship, no unlisted equity shares. Why you are telling whoever said ITR 2 is correct? It should be ITR 1 only, right? But here's a very important point to note. Now they have said, where there is any form of co-ownership, me and my wife, we are co-owning a property. She is the only person who's earning the income. Let's assume I have no income at all. I don't have salary. I don't have business. I don't even have fixed deposit. Some savings bank account interest alone is coming less than 2.5 lakhs. So who has to file the return of income here? Here she has to file the return of income, but she has to file in ITR 2 because I am a co-owner with her. Whenever any form of co-ownership is there, now they are mandating that ITR 2 has to be filed. It cannot be done in ITR 1. So therefore, even though I satisfy only the one house property criteria, they are mandating that in case of co-ownership, ITR 2 must be filed. Let us take a scenario where she is 99% owner. I'm only 1% owner. Sir, we don't care. Even if you're 0.00001% also, it is a co-ownership. There's no distinction made in this by the law. So therefore, you also have to file the return of income now. No options for you over here. So please be very, very careful when it comes to this. Any form of co-ownership, ensure that you're filing ITR 2. Similarly, if there is any brought forward loss, carry forward loss also from income from house property, they are mandating that ITR 2 has to be filed. ITR 1 cannot be filed in these scenarios. So some real practical tips for you, because next year when you claim the carry forward, you may be surprised to see that they are not allowing because you filed the invalid return or something like that. So just to be careful on those particular aspects. Dividend income. Okay. So we all know dividend income went through a lot of changes in the last few years. Earlier, the entire dividend income used to be exempt from tax. So then slowly they started modifying the law. They said first, yes, sir, it is exempt. Then they said it is exempt up to 10 lakhs. After 10 lakhs, it is taxable at 10%. Then now what they have said, we are removing this dividend distribution tax. That means it will be taxed at the slab rate in each person's individual hands. So therefore, it has undergone a substantial change, the law. But they didn't stop there. Now they have said, where there's any expenses incurred on dividend income, those expenses cannot exceed 15%, because recently it was increased to 20%, but it is capped at 20%. We take a scenario where this used to happen with some of our own clients. Certain employees of certain banks used to get beneficial rates of interest for them. Plus, if they're senior citizen, they get a beneficial rate again. So sometimes when fixed deposit rate is 6%, they used to get, if you're a senior citizen, it is 7%. If you're an ex-employee of the bank, then it is 8% for you. So +1 +1. Similarly, for housing loan also that used to happen. Housing loan interest rate is normally 9.75. If you're a senior citizen, it is 8.75. If you're an employee of the bank, it is 7.75. Now, if I take a loan, I am paying interest of 7.75. And if I make a deposit, because of all the beneficial things, I am getting an interest of 8 or 8.5%. Straight away, taking a loan and making a deposit in such a circumstance is giving you a profit. So I will definitely do it. I will definitely take a loan. And many people did that. So what they used to do, deductions under section 57, under income from other sources, you will claim your expenses and you will set it off. So I have taken a loan exclusively to earn this income from this deposit. So I am entitled to section 57 deduction. Straightforward, allowed, no problem. But for dividend income, they said we will cap it at 15%. Why they have done that, I still don't know. I don't know why dividend income, the expenses needs to be capped. You want to tax it at 30%. But when it comes to expenses against that, you are saying that no, expenses you cannot claim more than 20%. So what if I really incurred the expenditure for that? So therefore, this is an unfortunate current scenario where if you have dividend income, the maximum expenses you can claim on it is 15%, now increased to 20%. So why I am making this point? Because under your business income, schedule BP is there, no? In that schedule BP, you have to report any income considered separately, credited to P&L account, but pertains to some other head of income. You have to disclose it separately. Normally, they will give the heads of income. You have income from house property, income from salaries, income from capital gains, income from other sources. We'll break up and you have to tell how much in the P&L pertains to this head of income. Now, instead of having income from other sources, they have income from other sources from all other incomes other than dividend. And separately, they are asking for a disclosure for dividend. This is because they don't want anybody to claim more than 15 or 20% in the P&L and adjust it against other income. So specifically, they want an assessee himself to declare that the dividend income earned separately so that he does not claim more than 15 to 20%. Now let us come to capital gains. A major change, this was there last year itself. In capital gain schedule, now they have broken up the different types of capital assets. So you can select whichever capital asset is applicable to you and fill that portion of the ITR form, that is enough. But this year, they have made a very, very, very crucial change. This is a very important change. You see, now you have to fill up which date of purchase and the date of sale of that property. They are not stopping only there. Now, earlier, index cost of acquisition, index cost of improvement used to be manually filled by us. We used to fill what is the amount of the indexed amount itself. It will not be calculated. It used to be manually filled after we calculated. Now, both the cost of acquisition indexation is calculated also. And the cost of improvement, they want a breakup of it. They want how much is the cost of improvement. They want which year the improvement is there. And they will calculate the indexation. Now, why they have asked for this? Why is this such an important point? See, this point is a trap. I know many assessees and many CAs use the cost of improvement so that you will reduce the taxes in the capital gains. It will be genuine in many cases, but some cases they may not have the bills because at that time cash transaction was prominent. So he may have put up a wall, he may have done leveling, he may have done fencing. For this, he would have incurred expenditure, but there's no bill. It may have been a cash expenditure incurred 20, 30 years back. But you are not able to claim the cost of improvement because of this issue. Now let us take a scenario why this is a trap. I will tell you, this is a trap. It is a trap because of the latest amendments to the reopening provision. under the new 148A provisions, where any income is represented either in the form of an asset or an expenditure or an entry in the books of accounts exceeding rupees 50 lakhs, the same can be reopened. Correct? Up to 10 years, they can reopen. We are all aware of this 148A provision. Now, let me ask you a question. Is this 50 lakhs per year or is it aggregate across years? Is rupees 50 lakhs per year or is it an aggregate amount across all the years? Now I see so many different types of answers coming. Some people saying aggregate, some people saying that it is only 50 lakhs per year. Because that is what they announced when they said reopening. We are reducing the reopening from 6 years to 3 years, they said. So naturally, if it is about to reopen for 10 years, then there should be very strong, stringent conditions. So they said if it's only exceeding 50 lakhs, then only we'll reopen in that year. Now, what happened in this latest budget? They have said now, if that expenditure or if that income represented in the form of an asset or in terms of books of entry in the books of accounts, then in all these three cases, it will be shown across multiple years also for them to take this decision. So if I have cost of improvement, 10 lakhs 1 year, 25 lakhs next year, 35 lakhs the third year, then they will add all these three, it exceeds 50 lakhs across 10 years, then it is valid for them to reopen up to 10 years also. So please note this cost of improvement is a trap. Ensure you have the adequate supporting, ensure you have the adequate source also to explain how you have been able to incur this cost of improvement. So please be very, very careful when it comes to this particular change. It is a trap set under section 148A for them to reopen. Now let us come to income from other sources. Under income from other sources, there is only one major change, which is now they want you to declare deemed dividend separately. Earlier, entire dividend, there was a single box. Now for deemed dividend, there is a separate box that they are providing. And of course, the other change is you all know from financial year 2021 onwards, contribution to Provident Fund in excess of rupees 2.5 lakhs is taxable. The interest on the contribution in excess of 2.5 lakhs is now fully taxable at the slab rate. So now because of that amendment, a separate disclosure now has to be made. How much is such interest that you have earned from either recognized fund or voluntary provident fund? Whichever it is, you have to disclose the interest in excess of 2.5 lakhs. Quarterly breakup of dividend income, this was always there. Okay. Now your ITR 3. Sorry, someone said anything? Okay, I think that's my mistake. So anyway, ITR 3 is not yet out. The utility is not yet out. The form has been notified. But one very, very important thing they have asked now. They are asking you to disclose the date of commencement of the business. Date of commencement of the business has to be disclosed by you when you are filing this. So please, once again, be careful. Ensure the date of commencement and when you have started filing the return of income, they are in connect. So that you should not say it's a later date and then claimed expenses in the first, second year and all. If that exceeds 50 lakhs, then once again, they'll reopen the income saying that you have claimed it has commenced earlier. It is actually capital in nature. This issue is a practical issue. I'm handling many cases at the income tax tribunal. Even at the Hyderabad tribunal, I'm handling cases like this, where date of commencement is an issue for many companies. So they are taking up this issue and they are fighting on that point. Now they have brought it in the ITR form itself. They want you to declare it. So that later stage, if there's something wrong, they will say, no, who asked you to declare it? So please be very careful on that point. 115 BAC, I told you there's alternative tax regime. If you are opted for that, you are aware. If you are a salaried person, you can switch between old regime how many ever times you want in your lifetime. 1 year new regime, next year old regime, once again new regime, no problem. But if you're a business person, only once in a lifetime you have that option. So therefore, what they have done, they are checking whether you are opting for the scheme this year or whether you are not opting out, or what is your plan you have to select. So that at a later date, there will be record to show that you have already enjoyed once in a lifetime. So once you opt in and opt out, You cannot opt in again. So once in a lifetime option would be exercised by them. Okay, non-cash limit. You know that now for tax audit, they have increased the limit up to 10 crores. Very, very high limit in my view. 10 crores is such a huge turnover. So now they have said up to 10 crores, you need not do tax audit, provided not more than 5% of the transactions are done through cash. Now there was one doubt here because cash is a very, very clear term in my view. But then this time what they have said is even account pay checks, non-account pay checks, that is bearer checks or demand drafts will be included as a cash transaction. It will not be considered to be bank, even though it is happening through the bank, even though the debit happens to the bank. They are saying that where bearer checks are there or where DDs are issued, for the purposes of calculating that 5%, it will be treated as cash, even though it has gone from the bank. Now, these are the details I told you. If you're a director in the company or you're holding any unlisted shares, they're asking for a lot of information. You cannot file ITR-1. The reason is this. So these information you have to fill: name of the company, type of the company, PAN, whether it's a listed share or unlisted share. And if you're holding the shares, means what is the opening balance, how many shares you're holding, what is the date of the purchase issue and face value. All this information you have to give. Some of this information you may not even have. So it is going to be a struggle to ensure that you can from your client in case it's applicable to them. This question I have been repeatedly getting asked many days. Many CAs are asking me, Abhishek, is there any improvement in filling that section 112A? Very, very irritating schedule to fill in the ITR form is that 112A schedule, because they'll ask you the ISIN code. They'll ask you what is the number of shares, sale price per unit, what is the highest value as on 31st January 2018. All of these details now you have to mandatorily fill. So is there any improvement there? Is there any change? Unfortunately, that white blood, it is the same blood this year also. There is no change. You have to manually fill in. Now, I remember when I had a discussion with the CBDT. So you're asking and we are discussing on this aspect. So I said, why is, sir, you are asking us to fill? They said that, you see, we have an arrangement now with the SEBI. SEBI is sharing the information of what are the shares you have transacted. This was 3 years back. That time itself, you know, this was already in the pipeline. And now you can see in the AIS, whatever shares you have sold is getting reflected. So this is what he was telling me 3 years back. I said we have now come into arrangement where they are sharing the information with us for each other. See what they have sold. So I said, okay, why you are asking us to fill per share information? He said, Abhishek, if your assessee or the taxpayer lies to us, he says that he has not sold a share and we found out he has sold a share, we will take action against him because we have the information from SEBI. I said, sir, if you have the information from SEBI, you only fill it. Let it auto-populate the schedule. If there's any change, I will make the change. I will modify it easily. Please don't ask us to fill it. He said, yes, brilliant idea. We are going to implement it. We will implement it and all they said. But unfortunately, even as of now, maybe it will change in the next few weeks, hopefully. But as of now, there is no change there. You have to manually fill it. So why I am showing this page is because this ISIN code is very, very tiring. So as somebody has pointed out here, sir, if we have more than 100 transactions during the year for an assessee, he has sold 100 or 200 times, then each share, 200 shares details, do we have to fill it? Yes, you have to fill it. You have to fill the ISIN code, you have to fill all this information. So it's highly cumbersome process. In case some of your client trades actively, then unfortunately you are in for a tough time because you cannot finish this form in the last day and all. So you'll be under a lot of stress. So what tip I can give you here? See the wording that I've used here in quotes. INN not available. If you type this as ISIN code, it will allow you to proceed. Otherwise, every ISIN code, it has to be exactly correct. You cannot even make one alphabet or one numeral difference. If you make it, then it will not allow you to proceed. So if you want to beat that, you can put this INN not available. You can type this. It will allow you to proceed to fill whatever figures you want manually. So you need not auto-populate it. If you fill the ISIN code correctly, you fill this, it is enough for you to proceed to file the return of income. Other than this, okay, let us It's already 6:30, so I'll just quickly touch upon ITR-U, and then maybe we can take any questions if it's there, which is the updated return. This is the latest development which has been announced in this budget, where our Honorable Finance Minister said in the budget, now people who want to file the modified return or updated return up to 2 years from the end of the relevant assessment year, they can file what we call an updated return or a modified return, she said. So it's called an updated return. I was very happy when they announced it in the budget during the course of the budget speech. I said, excellent. Finally, an opportunity for someone to file the return of income. Because so many assessees are there, especially your assessees, you may face this, where they have not filed the return of income, they have to actually claim a refund. There's no way for you to do it. People who want to pay tax and file a return also, there's no way for them to do it unless the reopening happens. So therefore, people had to make a petition under 119(2)(b). There's no other way of doing it. So now, when this updated return came, I was very happy. But then, once you read the provisions of the law, you found that there are certain interesting conditions. What are the conditions? Where an assessee wants to file this updated return, and thus updated return reduces the tax payable, increases the refund, or claims excess loss, then all these scenarios, you cannot file a return updated return. Where a person is search or survey, he cannot file an updated return. Where you have already filed once updated return for that year, you cannot file again. Or where any assessment proceedings have been initiated, you cannot file a return of income. I saw somebody had asked a question to me saying, dear sir, if I've received a notice from income tax, at that stage I want to file an updated return, can I file it? No sir, even 143(1) will be considered to be a notice already issued that proceedings have initiated. So therefore, if you have not filed a return of income, you cannot now file an updated return of income once the proceedings has been initiated. So therefore, it's not a very, very beneficial provision, because if you want to pay tax, then you file, they are saying. You want to reduce your loss, you want to reduce your refund, then you can file. But any opposite, you want to reduce your tax, increase refund, claim excess loss, forget it, you cannot file updated return at all. It's not applicable for you. So very, very stringent provisions, especially given the penalty, because up to first 12 months from the end of the relevant assessment year, 25% penalty on whatever additional tax payable plus interest. Additional tax payable plus interest on that 25%. More than 12 months up to 24 months means 50% of the additional tax payable plus interest. Extremely high. So I have no problem with the rates. If they want to put these penalties, they should put it, but they should at least allow persons to claim additional refund or reduce their tax payable. Some benefit should be given to the assessee. If you cannot give any benefit, then people are not incentivized to file it. Sridhar sir has asked, in case of an assessee, Form 3CP, 3CD filed, but IT return not filed, can we file IT return under 139(88)? Definitely you can file. 100% you can file. This is meant for cases like that only. So definitely you can file. One more question has come. Sir, assessee has not filed the return of income. His income does not exceed 5 lakh rupees. So therefore, due to rebate under 87A, there is no tax payable. Can he file the return of income here? Okay, very interesting question. So let us take a scenario. In this case, what sir has asked, he says the income is less than 5 lakhs, but 87A, because of that, no tax payable. I'll take a scenario where your income is 2,47,000. Gross total income is 2,47,000. So you don't even need rebate. Already it's lesser than the maximum amount not chargeable to tax of 2.5 lakhs. So in this scenario, can this person file a return if he wants updated return? Yes or no? My answer is yes. He can file a return of income. But the next question is, what penalty he has to pay? Because tax payable is nil, no? Total income itself is 2.5 lakhs. If it exceeds 2.5 lakhs, you can say some tax payable. Gross total itself under 2.5 lakhs. So what penalty he'll pay? What? How will he pay 25% or 50%? He will pay 25% of 0, which is 0. If it is more than 12 months, he has to pay 50% of 0, which is still 0. So therefore, if you are filing a nil return of income, you can happily file under 139(88). Nothing in the law prohibits you to file a nil return of income under 139(8)(a). This will especially be useful for persons who have complied with the return filing criteria. Electricity bill, foreign travel, deposits, these criteria they may have satisfied, but they have not filed the return of income. Their actual return is nil, they don't have the income, but they should have filed the return. This will be extremely helpful for them. Or even persons who are seeking loan from banks, because banks ask for 3 years you have to file the returns. Then if you cannot file means they are not accepting, because they don't understand it is time barred. You cannot file the return of income. So they keep saying, no, 3 years, you have to give 3 years, you have to give. How you will give updated return? You can file a nil return and give it. Now, Kumar sir has said late fee might be payable. Absolutely right. Where your gross total income exceeds 2.5 lakhs, then you have 234F penalty, or rather 234F late fee, as they call it. This late fee is 1,000 rupees, or it will go up to 5,000 rupees in some cases. So worst case scenario, even if your tax payable is nil, penalty might be payable at 1,000 rupees or 5,000 rupees. So you have to pay at least 25% or 50% of that. So it's a good point, Kumar sir, you are absolutely right. I think these aspects I've already discussed. So ultimately, my point is there have not been that many changes, but whatever changes are there are very critical. But in my view, the most critical change as far as the changes in the ITR forms is the big one, which is the AIS and TIS. I think this will encourage more people to come and file the return of income. And I'm sure that if they don't file the return of income, now they'll start getting and facing the music from the income tax. So I have still not got the latest ITR-3 form. I have not been able to go through the utility. I have seen the notified form PDF version. Utility has not yet been made available. So unlikely there will be any other change than what we have seen. But sometimes I have found the ITR forms are slightly different when they get uploaded online, utility wise. So as it stands, I think we have covered everything. So thank you very much for a patient listening. Maybe I'll just take some of the questions which have come. Sir, if gross total income does not exceed 2.5 lakhs, is it applicable? Can we still file 139(8)(a)? Yes, you can definitely file 139(8)(a). You will have to pay penalty of 25% on zero, which is zero. So you can still file 139(8)(a). There is no restriction on the same. Rohit has asked, is updated return facility currently available on the portal? It is not yet available. At least when I checked today morning, it was not available. I don't know whether it has come after that. So I had some hearings and I could not see before the program, but as of now, I don't think it is available. Sir, please share the PPT. I will definitely share. I will send it to the branch management team. Or if you want, my contact details are here. You can drop me a message. I will be more than happy to share it. Sir, TDS as per 16A is more than that in 26 years. How to deal with it? If it is greater in 16A, sir, then he must approach whoever is the deductor. If let's assume my employer has deducted tax of 1 lakh from my salary, but as per 26 years, TDS is showing only at 90,000. Then I have to go to him and ask him to update it. So he has to file a modified and updated return. Then only I can file my return of income. But suppose he comes in the last day. Last day he comes to you, asks you to file the return. You can go by the facts. You file it and then you figure it out. We have received a notice on this aspect because the TDS as per 16A is more than that in the 26 years. You will definitely receive the notice because system does not use any discretion. But here, please note this section 235 of the Act, which clearly says where TDS has been deducted, but has not been remitted or furnished properly by the deductor to the tax department, then the assessee cannot be penalized for their fault. So therefore, you have a defense. But practically speaking, instead of going on appeal, instead of going to court, instead of making so many appearances, better you ask the deductor to modify. That person can modify in less than 1 to 10 days. It will be reflected in the 26 years. So best is to ask the deductor to modify and file an updated return. They will do it. Once they do the updated TDS form, then you can claim it. It will reflect in the 26 years. So taxpayer is not filed for assessment year 2021. but there is a refund due for that. Can you file under ITR return under 139.80? I am very sorry, Sharmila ma'am, because he has a refund. Straight away, they are saying that you cannot file 139.80. If you want to pay tax, you come. If you want to reduce your refund, you come. If you want to reduce your loss claim, you please come. If you want to get a refund, sorry, sir, it is not applicable. That is what 139.80 is about. Whatever is beneficial to department only, you can come under 139.80. Sir, is there a format for 139.80 released by the department? Yes, sir. I had shown a screenshot on my screen. I'll maybe share it once again. So this is the notified form, or rather one portion of the notified form. It is fairly straightforward. The only changes are what you see on the screen. So as long as it's satisfied, you can, as long as these criteria are satisfied, 139.80 will be applicable. You can definitely file under this particular provision. But if you want the utility itself, it has not yet been made available, Krishna sir. So it is only the notified PDF form which is there. We are still waiting for the utility to be made available. They said ITR-U. It is going to be called ITR-U. So far, ITR-U I have not seen. So any other questions are there? Okay, I think with this, we have covered all the questions. So thank you very much for a very patient listening. And I'll hand over the session now back to the organizers. Thank you very much.
Really wonderful, sir, because I know that you are having a tight schedule. In spite of your tight schedule, that we have accommodated us these 2 hours. Really wonderful, sir. In these 2 hours, you have explained more than these 2 hours. So really wonderful subject you have very clearly in understandable way. In pictures also you have shown, and case laws and explanations, everything you have covered, sir. Really wonderful. Now, members, any other questions are there? Because then and there itself he has covered point by point and question by question, and he has given a full explanation with clear pictures in understandable way. So I hope that nobody is having any other questions. So with this now, I request Andar Sridhar garu to propose vote of thanks. Sir, వినబట్లేదు సార్ శ్రీధర్.
Sridhar garu, you are not audible.
Sir, any problem is there?
Sir, am I audible?
Yeah.
Good evening, sir. Abhishek Murli garu, you have dealt the session such an excellent way. No, you have not left any doubts of the members. In fact, most of the members from this region are awaiting to clarify so many doubts for these ITRs and their updates, all these things. And on behalf of the Visakhapatnam branch of SARC and on my own behalf, we express sincere gratitude from the bottom of our heart. And your detailed explanation in AIS, capital gains issues, that ISIN disclosures and all those things, and also the 148 subsection 2A, that reducing the period of notice for the assessment 6 years to 3 years, the pros and cons, the inner the idea of the income tax department that has been very clear to all the members, and also the taxability of the interest on PF contributions, which is exceeding 2.5 lakhs. That is also very much helpful, sir. And particularly the explanation on the 113 ATA, the updated returns. It's a really helpful explanation for all the returns who have not filed, partly filed the 3CB 3 series and also not filed the ITR. So many members have got the answer for their queries. With these few words, we express our sincere gratitude. So thank you very much, sir. For the chairman.
Thank you very much, sir.
Sridhar garu,
Thank you.
announce
Thank you,
about
sir. Thank
tomorrow.
you.
Sridhar garu, announce
Yeah.
about tomorrow program.
Yeah, dear members, please note that there is a full day seminar on the auditing and assurance standards. Chief guest is the chairman of the Auditing and Assurance Standards Board, and the program is expected to commence from 9:30 a.m. We request all the members to participate in big numbers to make the event a grand success. Thank you very much, sir.
Thank you, Abhishek ji.
Thank you. Thank you so much, sir.
Thanks, sir.
Thank you, sir. Thank you, Sarvan sir. Thank you all.
I crushed your time. I know that.
No, not at all, sir. It is, we are correctly on time. I enjoyed it also.
Thank you very much, sir.
Thank you so much.